Hello, everybody, and welcome to this Speeki webinar series. For those of you that have not joined a Speeki webinar before, you will find that we cover one topic across a 30-minute period. We choose these topics based on issues which have been raised to us from clients or particularly trending issues that we see across the ESG and compliance spectrum. If you have not yet joined a Speeki webinar, we'll welcome. And for those that have come back, thank you for joining us again. Today's topic is focused on the assurance side of our Speeki business. And in particular, it's discussing getting your data and ESG data in particular ready for an assurance audit. As we will go through in today's session, assurance is now becoming very common in sustainability reporting, and getting your data set ready for an audit is part of your process. So we will cover a 30-minute webinar based on this particular topic. You are, of course, free to ask questions using the chat function throughout the webinar. I will try and get to as many of those questions as I can within the session. And if I don't get to the answers within the session itself, feel free to continue to ask the questions, and then I will address them very quickly thereafter on email. So please feel free to do that, and I will definitely get back to you. The session is recorded, so there will be an opportunity for you to go back over the session and to clarify any questions that you might have, and that can be downloaded by following the instructions in the chat function. So let's get started with today's session, which is the 7 steps to get your ESG reporting data ready for an audit. Now, of course, everybody should be aware that there is a fairly strong expectation by most regulators that sustainability reporting is now going to have some form of assurance, which is, when you think about it, quite reasonable, given that they are publicly available statements and disclosures which are being produced by companies. In fact, even if it's not a regulatory requirement, it should certainly be part of your own company requirement to ensure that assurance of your data is complete. So whether or not the law requires you to have some form of limited or reasonable assurance, I would definitely recommend that you take those steps. With the increasing amount of shareholder actions or claims regarding greenwashing, it would be a very strong advice to gain that level of assurance. Again, irrespective of whether or not the underlying law requires you to. Now, for some companies, that might be surprising, but for most, that should be fairly standard practice. Now, the way that you are conducting audits and reviews of your sustainability statements are quite different to your financial statements for obvious reasons. We'll touch on some of that in this presentation because the data for ESG is quite different to the data that you're readying, for example, on the financial side. So today we're going to focus specifically on getting the data ready on the sustainability side. Now, this will be a challenge for many companies, not the least of which is that you have probably had 50 years or more arranging for your financial reporting, and this may be the first time that you are now starting to get your non-financial reporting or ESG reporting in a format that is ready for assurance. So not surprisingly, this is the first time or maybe the second time. And it's not surprising that it will be a little challenging. And it's not surprising that you will take a few years before you get it right. So the message to most companies is it has taken a long time to get your financial data in order, and it will take an equal, if not longer, amount of time to get your non-financial data in order. So think of it as getting your data as good as it can be for an audit. It may not be perfect, it may not even be complete in some cases, but getting it up to that auditable standard is what we are going to focus on today. Now, keep in mind a few things that I want to cover. Now, firstly, again, you've been doing this for a long time on the financial side, so you may not necessarily have those lofty expectations. But the similar concepts apply in the non financial world that apply in the financial world. So, in many cases, a lot of the work that you have done on the financial world to make sure that your data is accurate and audit ready will equally apply in the non financial world. So, many of the controls that you already have can be repurposed or expanded to address the non financial world. And we'll touch on some of those controls in this webinar. The final message that I'd leave you with is don't overthink this process. All of the auditors, for which Speeki is one, are aware that this is the first time. We're also aware that we're working with limited assurance. So we're not doing a deep dive like we would on the financials. We're doing a little bit less of a dive when it comes to the sustainability reporting. So don't overthink it. Get it as best that you can. And hopefully in this presentation, I'll walk you through some of the things that you can do to make life just that little bit easier. Now, I'm going to walk you through 7 steps to getting the data ready. Now, in preparing these 7 steps, my observations were that they were all fairly obvious, and I suspect you'll find them fairly obvious as well. That's not to say that they're simplistic or that they're things that have already been done, but you'll probably find them quite basic. However, we've got to get the basics right before we start to refine the process. So you'll see in a few cases, and I openly accept, that some of these are relatively straightforward and should be done as a matter of course. It should be totally obvious. However, we're stating them for the sake of completeness and also because we think that sometimes even the most basic things are not addressed. We think that's pretty important that we get right. So bear with me on some of those areas which should already have been done. But before we start, again, put yourself in the position of an auditor. And when you think through these 7 steps, think about if an auditor was coming into our business tomorrow to conduct a review of our sustainability data in order to sign off and assure our sustainability report, what would that auditor do? Now, if you put yourself in the shoes of the auditor, hopefully you can start to think, well, what would that auditor look for? Now, I can tell you from my own perspective, when I'm conducting audits, I'll walk through my thought process, and that might help you understand where an auditor is likely to come from. Now, firstly, the auditor is coming from working with a number of clients. So coming to your business, the auditor needs to get across your business relatively quickly. So as part of our process at Speeki, we get the auditors up to speed pretty quickly. Now we can read material, we can read websites, we can read a lot of information, annual reports, sustainability reports. We can read a lot of information on your website. However, that's often not enough because we need to understand how the business functions. So thinking about that education program for that auditor is really important because the more that the auditor can understand your business and they can understand how things operate, understand the structures, understand the basic relationships you have with some of your key partners or suppliers, will help the auditor put some of these pieces together and hopefully not waste your time in asking dumb questions throughout the audit. I personally like a top-down approach. What does that mean? Before getting into the detail of whether these particular numbers are accurate or not, I like to get the higher level perspective. So let's talk about carbon as an example. When I'm looking at carbon numbers, I do not go straight to a spreadsheet and start calculating carbon numbers or looking at your calculations to make sure that your emissions factors are correct and that they're mapped correctly and that you've done the calculations correctly and that they've all been rolled up and the spreadsheet adds up. I'm not going to do that first. What I'm going to do first is try and understand your carbon program. Understand how you go about managing carbon, how you go about your team that is put together to identify the impacts, risks, and opportunities that you have in relation to carbon and climate change. I'm going to look for the people, for the resources, for the sorts of technologies, the tools, the processes, the rules, and the systems that you have in place. I'm going to understand how that is put in place practically. I want to know how it has oversight and to what extent management is involved in managing this carbon program. I want to understand what your objectives are, some of your goals, some of the key areas that you're going to focus on. By starting at the top and coming down, I can understand how you have drawn your boundaries, how you have identified those areas that are in scope or out of scope. With all of that information, I can start to build a picture of what your carbon management program looks like. Now, hopefully, that's all been documented anyway, as most of those areas are required as part of the disclosures, at least insofar as IFRS S2 and CSRD. But now that I understand that top-down approach, then the calculations are pretty much routine. It's basically emissions factors and mapping them against the raw data, which we'll cover. So thinking about how you equip your auditor is really important. So think through that information first. Now, of course, the auditor has limited time to conduct this audit. And again, it is limited assurance. So I always take a risk-based approach. So I will be guided by your level of risk, not mine, which means I'm going to go to your materiality assessment. And I'm going to look at what's important to you. And I'm going to go through your materiality assessment in quite a bit of detail. And I'm going to try and understand how you put that together. That will guide me on where I focus. So if, for example, carbon is not a very important piece to your business, let's say your emissions are very low, I'm not going to spend all my time pulling apart the carbon data to try and make sure that it adds up when it is a very small opportunity or risk to you. And frankly, water or energy or diversity or human rights or supply chain are far more important. So again, as an auditor, I'm going to apply my time in the places which I think can add the most value, and that's materiality and risk-based. And also keep in mind the definitions of limited and reasonable insurance. We are not doing a deep dive here like your financials. We're doing a relatively quick overview of your sustainability statements and doing that work. So before we started, I wanted to sort of clarify some of those things so that as we go forward, you can think through what the auditor's role is when it comes to data and how you can get your data in shape. Because some of these things that I'm going to focus on first are kind of in this category of preparation. And it's important to get right, even though it's incredibly basic. Now, firstly, we're building a story, a sustainability statement and the disclosures required by the various and ever increasing standards around the world and frameworks are telling your story. Now, in the financials, you don't have a lot of story to tell. They're very financially driven. The numbers tell the story. But in the non-financial world, the numbers don't necessarily tell the story. It's often the qualitative piece that tells the story, and the numbers support that story or back up that story. So the first thing that you need to do is to make sure that your qualitative work is consistent and that it flows. Now, why is that important? Because remember, the data that you need to ready for an audit is quantitative and qualitative, meaning the words as well as the numbers. Now, the words is what I'm going to read first. It's part of that top-down, high-level approach. So I'm always going to read the words first. I need to understand your program, how it works, before I can start digging into the numbers. So making sure your qualitative piece works. It tells a story and that it is consistent. Now, many of you are aware that ESG topics could be 15 to 20 different topics included. And depending on your materiality, you may be reporting on 5 or 15. That means there's no doubt a lot of information that has come from around the company and probably written by multiple people. Try and do your best at this stage to simplify that qualitative piece. Use AI to rewrite some of those pieces. They're very good at doing that, frankly, and making them consistent. And for example, that's what we do within the Speeki platform. We use our Nicole AI in order to redraft these qualitative pieces so that they're consistent for you. But that's important because that backstory is key to that learning and that qualitative data, which has to be right. Now let's move into the next category around boundaries and scopes. Now, all of us have read sustainability statements and realize that they can be absolutely shockingly misleading. And most of that misleading piece comes down to boundaries and scopes. I was reading one today from a very famous IT company that was talking about its approach to some of these topics and how wonderful it was that AI, for example, and data center usage uses so little carbon. Now, of course, what they had done was drawn their boundary and scope so narrowly that it only really considered the answering of a chat function on GPT. What it didn't consider is all the work that's gone into the training of those models in the first place. Again, they drew a boundary. So based on that boundary, it was perfectly acceptable and correct statement, but somewhat misleading, except if you dug in. So I need to understand your boundaries and scopes. So how your boundaries being drawn could be different in different parts of the company. Let me explain. Let's look at diversity numbers or employee numbers. In some cases, the boundary may include contractors. Other cases, it may not. It may be just employees. You decide the boundaries. We need to articulate them very clearly so the auditor can understand them. Again, carbon numbers. We know there are lots of ways to represent carbon, water, and waste. That could be from an operational control perspective. It could be from a equity perspective. It could be from a management control perspective. So understanding those boundaries and making them very clear to the auditor is really important, because there is no point in going and reviewing the data unless it maps back to the boundary and maps back to that story that we've been telling throughout this webinar and that you're telling throughout your sustainability reporting. So boundaries and scopes are really important in this area. And again, keep in mind that they're going to be different across different areas. You may draw different boundaries. Some areas you may include operational issues, other areas you may not. Some areas you may include suppliers, other areas you may not. There are very different approaches across the different topics. So just making that clear is important. And remember, your auditor is coming into this from seeing lots of other material. And it's tough for that auditor to get across all of this unless you've made it pretty clear. Now, one would hope that this will be the case, that your internal audit has already been done. So if you're asking an external auditor to do some work, it's pretty normal to have that internal audit done first. Now, most companies are not doing this. And they're not doing it because they've just run out of time, frankly. So what you'll need to start building is an audit program around your sustainability statements, an internal audit program. So before you get to the external audit on my side, you've actually done an internal audit. Now, the value of doing an internal audit is obvious to everybody. Hopefully, it will iron out all the issues. It will clarify the gaps. It'll identify where the duplicates are, the overlaps, the areas where you need to dig into. It'll identify where those mistakes may have been made. So the internal audit is absolutely key to get done. You really don't want that to be done by your external auditor. You want that to be done by the internal team. So building that internal system for your sustainability reporting will be important. Now, again, most companies have not done this, but it is pretty obvious, and it should be something that you should be doing, but it's something that not everyone is doing. Now, again, as the external auditor, I like to see that those have been done. I like to read them. I like to look at their scope just to see how broad it was. whether it included all countries, all topics, some topics, whether it was just carbon or whatever. I like to see how it was done. I also like to see what the results were. I don't necessarily have to read the full audit report, but it's good to see some of the actions that came from those internal audits. So again, you've got to remember as we go through this, you'll probably note that I'm not talking about digging into data specifically and making sure that things add up correctly. I'll come to some of that. But you'll see from the taste of this webinar that we're thinking about data in a broader sense. Data from qualitative data, boundary information, scope data, ownership, oversight, internal audit type data. All of that comes through as part of the inverted commas data set that is being audited. So again, think more broadly when you think about readying that data. Now, I mentioned that there are a few technical or relatively obvious things that should be done, and that's this category. Now, in our financial reporting, it's pretty straightforward. We identify currency. We say that these financial reports are prepared in US dollars. Pretty obvious. And we have a table that says, by the way, we do business in lots of currencies, but we report in US dollars, and this is how we do the conversion. Makes sense. We have one standard, one US dollar, one currency. We recognize there's others, and we have a conversion table. However you do that conversions, you do it on the spot, you do it using OANDA, you do it using a Royal Bank, you do it a monthly, quarterly, or even daily update from finance. Whatever you want to do, you have a policy, and it's very clear in your financials. We need to do the same thing here in sustainability. You need to have a position, and that position needs to be on things like units of measurement, kilograms or tons or square meters, kilowatt hours, liters versus gallons. You'll need to decide in your company what that's going to look like. Now, the guidance from the standards has certainly got some preferences, but technically you can produce your sustainability reports the way that you like, provided there are various conversion tables. Now, in this case, conversion tables shouldn't fluctuate so much, not like currencies, because 1,000 kilograms is a ton, and that should not move. So it is important that you set out what it is. So when I come to your audit and I'm looking at your information, I clearly know what these numbers mean. The number one place where we would find issues is in standardization of units. Sounds really simple, sounds really obvious, but you'll be surprised to hear the number of times when we're talking about 1 kilo or 1,000 kilos, or we're talking about 1 mil or 1,000 mils, and we've got inconsistent information coming together. So again, it's not rocket science, very easy to fix, very easy to document, and then it's clear for everyone. But this is one of the areas that you can prepare to make sure it works for you, but also works for the standard you're reporting under, but also works for your auditor. Now, your auditor obviously is going to be looking for the source data. So they're going to be taking an issue, let's say it's energy usage, let's say it's renewable energy usage. So we have a number, you've provided us with a number that says 50-50. So 50% renewable, 50% fossil. And the answer is great. Well, how did you get to that number? We just need to trace it back. So where did those numbers come from? They came from the accounting system. Excellent. Where did those numbers come from? They came from invoices. Excellent. Where did the invoices come from? They came from the supplier. And on those invoices, we can clearly see the percentage and we can see how that's been traced through. Now, that's one way that the source data may have come from. Another way that the source data comes from is you can look up online to see a particular provider of energy. They'll tell you that it's 40% or 35% renewable. So maybe your source data is an invoice, but that doesn't tell you the answer. I've got to go online to get the percentages at that point in time. So again, source data, knowing where the data comes from, knowing where it traces back to. Again, it's not rocket science. We find it mostly in energy data. Emissions factors are another one. Where did those emissions factors come from? Occasionally we see it in HR data as well. So tracing those source systems. Now, the other thing as auditors we're concerned about is that things may change or they may get changed. So we're constantly worried about the twiddling of numbers by people who have got the right access. So I'm going to ask questions around your access controls and just when the data is locked down. How is it locked down? How is it edited? How is it changed? Those sorts of classic data tracking, locking down questions are areas that I'm going to dig in on. Now, the final area, which is related to the internal audits, is we'll do a walkthrough. I mean, before it gets to the external audit to myself, have a look at some major gaps, major swings, major trend changes. Look, this is not a full-blown audit. We don't have time. We are going to be doing limited assurance, which means I'm looking for things that don't look right. I'm looking for things that don't make sense to me. So if there's major swings, there's zeros, there's gaps, there's changes from year to year, which can't really be explained, that's what I'm looking for. And I'm looking for you ahead of time to flag them and put an asterisk or put a footnote that says, we sold one of our entities. We sold that entity this year, 5,000 staff left, and that really adjusted our numbers. That's all I need to see. So think through that ahead of time. Now, in closing, assurance can be a fantastic tool. It can be an awesome way to get your data correct and get right. Just work with your auditors closely, engage with them, talk to them, understand them, see what they're looking for, think through some of these things in advance. Now, I always leave a webinar with the top 5 before I move to some of these systems and some of their questions. Firstly, look, the competency of your auditor is everything. Be really cautious around that. We did a session, a webinar recently, which got a lot of great feedback, which was selecting an auditor. Be careful on it. You don't want a minutiae person that's going to dig into the numbers and drive you crazy. That should not be the focus. We're not here to add up numbers and make sure it's right. It's different. Secondly, your system took a long time to build all the financials. It's going to take a long time to hear. So chill out, relax, just get it as best you can. That's why your auditor is here. Thirdly, you're going to need some form of system to pull this data together. Speeki is a system we have, obviously, that we sell to clients that does some of that. But you're going to need some sort of system. And as you get more sophisticated, that will be essential. Fourthly, you'll need to start building some internal controls. So you build a lot of internal controls around your financials. You'll also need to build it around your non-financials. So the internal controls may look at a number of elements. It may look at how your data is collected, how it's reported, who has access. It may look at change controls. It may look at reporting controls. There's a number of internal controls, the rules, the system that you'll need to build, and that will need to be tested as well. And finally, look, this is a great opportunity for you to really refine your sustainability model and build that trust that you need with stakeholders. So it is a fantastic way of doing things. So I do encourage you to get this and get this right. It just requires a little bit of work on the data side, a little bit of preempting about what the auditor might be looking for, and a little bit of documentation won't go astray. Now, in closing, before I answer some questions, there are a number of really interesting stuff that we have on our website, including this article, which is about the changing role of the sustainability officers. You can take a snapshot of the QR code, or you can find it on our website, but there's a lot of information on our website. So I encourage you to look at the resources section and really go forward. And finally, let's look at one of the questions. The question was, should I be certified to do an audit for ESG? The answer is there is no necessarily certification for magical ESG. It's such a broad topic. I myself are certified under ISO standards on environmental standards, health and safety standards, social relevance standards, information security, compliance, corruption, and a bunch of other areas. So I use the ISO standards to become a certified auditor under ISO management systems, and I use that knowledge plus all the other knowledge I have in order to become a proper auditor in this area. So that's the way I would do it. that will give you the most information you need. But certainly the ISO management systems are a great system because they've been doing this for a long time. The auditing is very well structured and laid out. So if you're a certified lead auditor in some of those areas, you're pretty well positioned to do this work. So hopefully that answers that question from Dinesh. So let me say thank you for joining this session. The process is, if you have further questions, please feel free to reach out to me and I will give you some answers. If there's anything you need from us in the meantime, please reach out to myself or the team. Otherwise, thank you for listening to this edition of the webinar, and we look forward to seeing you at other editions coming up soon. Take care. Bye-bye.